Welcome back to the Real Estate 401k show. We are your humble hosts. I'm Mike Weinstein alongside Justin Frecerick and the not so humble Ryan Gerdes.
Guilty.
All righty. If you or somebody you know is getting ready to get behind and miss mortgage payments or currently behind on mortgage payments, you're going to want to go ahead. You're going to want to tune in, just listen, and get ready to text the word SHORT to 623-AZ-RECON. That's short to 623-AZ-RECON. Gentlemen, there's always a lot of talk and always a lot of speculation about what's happening in the market. And people are like, oh, the market's going to tank and we're going to go back to 2007 again. I have yet to see anything to support that. Nonetheless, I think that there are going to be, with the way the job numbers are looking, interest rates, and more importantly, credit card debt, we are finding, and we're going to continue to find people that are getting behind on their mortgage payments, and they're not aware of their options. There's a lot of embarrassment, a lot of shame that goes with it, and they don't explore their options, and that's what we want to talk about. Here's what I'm seeing, and here's what I'm kind of predicting, I guess. Years ago, we saw a lot of people get into interest rates, high twos, low threes, mid threes, incredible interest rates. We encourage people never to sell that loan and never sell that house,
Right.
you know. It's an incredible interest rate. But people continue to rack up credit card debt, and we are seeing record levels of credit card debt across this nation. And then you get people who are $40,000, $50,000, $60,000 behind or, racking up in credit card debt. Now, all of a sudden, they're doing cash out refinances, pulling cash out of their home because they build up a ton of equity and can afford to do it. But now their interest rate went from 3%, let's just say, to 6.5% to 7.5%. Unfortunately, it can be a vicious cycle because, when I was in my 20s, I was always bad with credit cards, always bad with credit card debt. Rack it up, pay it off, rack it up, pay it off. And, unless you can break that cycle, if you're bad with your credit cards, you'll be bad with your credit cards again. And so now they've paid off their credit card debts. They've got a very high interest rate, a high mortgage payment, and now they're back to $40,000, $50,000, $60,000 in credit card debt. And they can't either afford to do the two, pay the two, or they might lose their job. We're going to see more and more layoffs. And now they're getting ready to get behind on their mortgage payments and or are 30 days late or 60 days late, facing foreclosure. And Ryan, what we see again, oftentimes people become embarrassed to talk about it. They don't want to answer the phones because there's just a lot of shady people out there that are buying this data and calling these people and trying to exploit them, not giving them options. And so they don't pursue options. And for me, the worst case scenario is foreclosure.
I think of this as lazy leverage because I think that when people are in need of cash, they're thinking, oh man, if I have to go through the process of getting a HELOC or a cash out refinance, I got to go through the appraisal process. And, I saw this coming, but I decided to wait until the last minute. And so I need something quick as opposed to the possibly 30-day process of getting cash out of my home, that if I apply for this credit card right now, I can have access to that cash in, say, a week's time and get these things done. Now, it's lazy leverage. It's irresponsible. But I don't think that that's really the big problem. I think that people are being so short-sighted in that shit happens. You might wake up and someone in your family gets ill or you get ill and you can't go to work or you have additional medical expenses or you just, whatever, or, God forbid the worst should happen to someone in your family or someone in the household, right? And then you're like, well, I have this credit card debt, and then now I'm going to roll over and take out more debt in the home, and then just kind of splash money back and forth. So that being said, I can't fault people for running into tough times due to illnesses or unemployment or some of these things that we all face. That I don't wish that upon anybody, but you have to have that rainy day fund. And if you are starting to get into that rainy day fund, or you are starting to over leverage yourself or whatever, you have to figure something out. You either need to get rid of liability or increase assets or both, right? Or increase income or all three. So that being said, we are running into a lot more people that are facing default, meaning they're missing mortgage payments. And we have incredible history of success and experience when it comes to helping people get out of those situations. I'm not saying that we're here as a scapegoat, but what I am saying is that we've provided a lot of very valuable consultation that's helped people who have run into those issues. And, we all make mistakes. So there's no judgment here. And like you said, when you're in your 20s, you were bad with credit, you're bad with credit cards, guilty. Me too.
All of us.
I think all of us had to learn the hard way. It's an expensive mistake to learn. And unless you're a trust fund baby that, just had access to resources your entire life, it's going to happen to you too. It's just the way that it is. I don't care how disciplined you are. So that being said, there's these banks, they do not want to foreclose on you, especially if it's a primary.
I want to let you get into the options because you're so well versed in it, but I do want to let Justin jump in here and kind of give us a little bit of insight to what, because you see the finance side of things. I'm speculating. I'm not speculating. I am speculating from things that I'm seeing. But you're knee deep into people's finances. What are you seeing from your perspective?
I mean, you guys are nailing it. It's unfortunately people typically when they go down these roads, they typically wait too long before they contact us. So we can't really do much in a lot of these cases because they tend to already start hitting late payments before they call us. And we already have maxed out credit cards, so we don't even have an opportunity to get our scores typically where we need to be. But if you're running down these roads and you're getting there, or all your minimum payments of your credit cards and all your monthly liabilities are just soaking up your paychecks, before you start getting behind, reach out, give us a call. Now, typically, and I would say 99.9% of the time, the scenario that we're going to lay out in front of you is going to cost money. It's going to, it will put you in a better situation, but it's going to cost money to get you out of these debts and consolidate everything. But if you have a home with equity and you're running into these problems, let us coach you through. Let us tell you what we can help you to accomplish for future better credit card management, better credit scores, things like that. Let's get you out of this hole before you dig it too deep.
All righty. If you are facing tough times and you are late on your mortgage payments or can't figure out how you're going to be able to afford your next mortgage payment, or you have a family member in this situation or a friend in this situation, we would love the opportunity to just sit down and chat and explore the options, and don't you got these companies that they're buying the data. They know companies out there know who's late. We have access to the data as well, and they're trying to exploit you, trying to get the best deal possible for themselves, without really walking you through your options. And so, Ryan, somebody text the word short to 623 AZ Recon. Again, that's short to 623 AZ Recon. And they're like, my mortgage payment's due tomorrow. I'm not making my mortgage payment, or I missed last month's mortgage payment, or I've just got a foreclosure notice. What are we doing? How are we handling these calls? And why should they call us?
I'm going to just give you some stories. I'm going to be anecdotal about it.
Sure.
So I have a good friend. We were all hanging out. We were doing a double date, him and his wife, and my wife and myself. And we were just hanging out, and then comes to fruition that hey, she. During the COVID time, she got some really bad lung damage, and she couldn't perform her job. And so they not only cut back her hours, they cut back her income, and she was no longer able to make that payment. And so I personally got on the phone with her in the bank, and we negotiated out a loan modification. Now, as you'll recall earlier on, I told you these banks do not want to foreclose, especially if it's a primary. So we got on the phone. We were transparent about it. And they had already had foreclosure proceedings going on. So she was probably about 30, 45 days before they were going to, lock her out or actually take physical action, taking back the property. So we were able to get that negotiated out, notarized, and instead of they tacked on the late payments and the interest and made it a 40-year loan and made it something that she could now afford. And now they're living happily ever after there within the same home with a new loan program. And so that's a huge success story. I've done a lot of those. We recently had some folks that bought on a VA loan. And then they unfortunately started leveraging a lot of different stuff. So when I say VA loan, because they bought with 0% down. So moving into the property a few years ago, they had no equity when they moved in. And due to some price adjustments in the market, they were upside down in their equity position. And because of the other leveraging and some illnesses in the home, they could no longer make their payments. And so we went in and actually negotiated a short sale because they needed to move back in with some family in order to get the help that they needed. And not only did we negotiate the short sale, we got buyers together and had very, very minimal friction and impact on their credit score, and were able to help save the day on that. And then another excellent success story that Justin and I are going through right now is a good friend of mine. It's a little bit different. It's not that they're necessarily late on their payment, but they're living with her mom because she was in a tough spot, medically speaking, and so she couldn't make the payment, and there's a lot of physical requirements in order to help her with her illnesses, and so it made it difficult for them to work, and so we had to ask some hard questions and have hard conversations, and I know I'm speaking like, oh, it's so easy to do that. I understand that it's not easy. They had to dig and claw and fight, and she went from not working to getting full 40 hours a week and getting a good paying job within a week's time. And then she heeded a lot of the advice from the Frecerick team to get the credit in gear. And we had to creatively move some assets around in order to make all these things possible. So there's just so many different moving parts. And it's just something that I, quite frankly, that's where I thrive. That's where I do my best work, and I love those tricky situations where we can kind of put all these different pieces of the puzzle together and create these success stories. And they're closing today.
They actually already signed.
They already signed.
sweet.
That's badass, dude. High five, brother.
Yeah, high five, man.
Fucking awesome.
Well, I think also too, and one of the other options, and like I said, when people start getting the notices from the banks, right, and they get behind on their payments, they kind of cocoon themselves, and if you're not exploring all your options, we've seen people allow the bank to foreclose on them, but they had enough equity in their home to actually sell their home, pay all the back payments back, pay the loan off, and still put quite a bit of money in their pocket. And we recently, well, you actually physically went and looked at the house, but we had one come across our desk where they're likely probably had enough equity to turn around and sell it and put some money down, put some money in their pocket. But instead, they didn't really explore that, and the foreclosure date is happening so soon. It's almost impossible.
I'm gonna have to pull a rabbit out of the hat on that one.
Yeah, but it would have been
out.
almost impossible for them to put it on the market, get full market value for it, because there's just not enough time for it, and they're just not exploring their options for it. So I guess my point is there are some people who are behind on their payments. They're facing foreclosure, but if you get ahead of this, enough, you might be in an equity position to be able to sell it. Yeah, the bank's gonna, you're gonna have to pay penalties and fees, but not only are you not gonna have a foreclosure on your record or on your credit report, chances are you might be able to put some money in your pocket, and that's why it's so important to text the word SHORT to 623-AZ-RECON so that we can go through all the options with you.
I'm with you, brother. And you know what? In all these situations, it was no money out of pocket for them.
Yeah.
Now, there's some scenarios where that may be the case. I'm not saying that you should call with that expectation, But more often than not, like I said, these banks don't want to foreclose.
They don't want to own
and
real estate.
They don't, and so more often than not, they're willing to compensate us for our services as well as the lending side of things. And there's just so many different ways that we can creatively package these deals, because whatever you have in your head, oh well, this is just a one-trick pony. My condition is a lot more complex and unique. Give us a shot, because I'm not going to say I've seen everything, because I know that the moment I say that, someone's going to throw me a knuckleball into the dirt, and I'm going to be like, okay. But we've seen a lot, and we have fantastic relationships with some of the best professionals in the industry. And when we roundtable these things and really put together a game plan, it's lights out.
Mm-hmm.
All right, Justin. So we've talked about the different options, but you're the guy who handles the money sides, pulling credit reports, understanding the impact that different things that happen impact your credit report. So we talked about, the options of a loan mod, or they get behind, but they sell the house, but they still got some late payments on their credit report. There's the short sale, and then how bad is a foreclosure, and how bad is as far as the difference between a foreclosure and some of these other options.
Foreclosure is much worse in the lending aspect compared to short sales or loan modifications. I mean, you're looking at 7 years before you can purchase another home.
That's if you're doing everything right after the foreclosure.
That's correct. That's correct.
That's a good point.
You're going to have a really hard time bouncing back on credit with foreclosures. You're gonna see a large impact to your credit for 10 years on these foreclosures. Short sales, you're not near as much impactful as a foreclosure, and a lot of times you can still, if you get ahead of it, you can get through them and still have high 600s, maybe even low 700 credit scores. If you call in advance and you're running into these issues, there's really nothing you can do. You can get in. A lot of times you can get into a new home within 2 to 4 years, depending on what types of products we have to go with. But outside of home financing, a short sale is going to be very advantageous to you for credit cards, car purchases, things like that. Things that you need to survive, the things that you need to continue going on. A lot of times you're going to have a hard time getting a rental property with a foreclosure, just due to what it does to your credit scores. Short sales, you're not going to run into those types of impacts.
So true story, and this is meant, I'll just end it on a high note to be of encouragement, because we know people are going through some tough times, and we're going to see more and more of it, I think, in the next 12 to 18 months, my personal opinion. And there may be people listening to this episode that are going through these tough times, missing mortgage payments, know somebody that's missing mortgage payments. And again, we want you to text the word SHORT to 623-AZ-RECON. But there's always light at the end of the tunnel. Mm-hmm. And my wife and I, we had, I'm not going to say a vast real estate portfolio, but we, in the mid-2000s, we had quite a bit of homes because, they were just giving away loans, zero down and interest only and so forth. And so when the market crashed in 07, 08, my wife and I, we got caught up in that. And finally, we kept making the payments. We were taking losses. I was in real estate. She was doing mortgages at the time. It was the perfect storm in a bad way for us. And so finally, we just had to sit down and say, we understand. The right thing to do is you took out a loan, you promised to pay it, and so forth. But we just got to the point we couldn't afford it. I felt like I said, our family, this is like a business. At some point, we have to make decisions, from a business perspective. And so we had 2 rental properties we just had to let go. We fought tooth and nail on our primary, held on to it as long as we can. Again, my wife's doing mortgages, I'm doing real estate, wasn't a lot of income coming in. Mm-hmm. And we finally had to make the decision to let our primary, walk away from it, and they foreclosed on it. I didn't know back then about short sales. There was nobody like us talking about options. We were very embarrassed about it. Wasn't talking about it with anyone. We didn't know any options, so the only option for us was let's just let these homes go. And obviously, guys, it it jacked up our credit and so forth. But, you know, that was 16 years ago, and we did everything right since then. We made a lot better decisions, and now we own rental properties, and we own a second home, and we bounce back from it. And so the point of this is there's always light at the end of the tunnel. You just got to be working with people that can guide you through that. So
Well done, buddy.
all right, so that was serious.
Yeah.
So
Let's
let's have
switch
some fun.
gears.
Let's have some fun.
Yeah, it's Friday.
It's Friday. Fun Friday. All right, Ryan. We haven't been able to do this in a while because the three of us have not been together in a while. Your favorite, and I don't know because I don't know whether this is about. Well, what do you want to ask us? Our favorite is?
Yeah. So I felt like a good topic would be like a good resort / staycation or something of that. Maybe you're visiting from out of town. Maybe you live here. Like, what's your favorite resort that you like to go to? Is what I was thinking.
I'll let you
I'm going to go first.
Go for it.
Hands down, JW Marriott.
That's a good one.
I love that place.
Kids love it. There's
Yeah.
good golf. It's not too far out of town.
The golf is incredible. My wife loves hanging out there and just walking around and seeing things there. And one of her nephews works there as a chef. So
Nice.
she
What's
gets-
the name of that restaurant?
gosh, I wish I could tell you.
Yeah, I know. I've been there.
The Polynesian one, Roy's.
Yeah, that's
There.
it. Yeah, Roy's.
Dang, I'm bringing my game
Dude,
today.
look at
I know
you,
I
man.
know stuff.
Yeah,
I can always count on you to be spot on with food.
the pool is great there.
Yep.
The ambiance of sitting outside on the patio is wonderful. I love that place.
Heck yeah. No, that's a good one. What
All right,
about you,
boy,
Mike?
this is a tough one. Obviously, I've got some loyalties to. Now I can't remember the name of it, so I guess it really doesn't matter. But
Can't be that good.
yeah, Fairmont. I love Fairmont.
Okay.
Our good boy Thomas Williams runs the place over there.
yeah.
But I, for my money, like if it's just my wife and I, and we're wanting to just go have a romantic time and enjoy the pool and all that, Hyatt at Gainey Ranch, and that's where I proposed to my wife.
Really?
We were on the gondola.
Okay.
And we had the Italian restaurant thing, and I'm shitting bricks during this whole dinner. That's hard. You're having dinner, and you know you're about to propose. And we went out there on the gondola, and that dude's just singing all Italian opera, and I do the whole thing.
Gondola.
Gondola. You know,
Tomato,
stop it. Yeah, and did the whole get down on my knee and proposed, and she smiled and cried, but she never gave me an answer. There was never a yes. You build it up. But I would say the Hyatt at Gainey Ranch.
All right, good. Those are really good responses. My favorite one, and I love those too, and I would say probably the Princess is probably a close second because of all the activities and how family friendly it is, and then going there in the winter and whatnot. But for me, because I kind of think of those things like something romantic that it's just Christine and I, no kids, and just kind of feeling like we're away from everything is the Boulders.
Yeah.
So at the Boulders,
I've never stayed there.
I've never stayed there
You
either.
get your own little casita, so you have your own detached house, if you will, like a tiny home, and then they drop you off and pick you up in these golf carts, and you can go back over to the clubhouse or over to the restaurant, and so it's really cool because you feel like you're kind of out in the middle of nowhere, and you have all this privacy, and it's just so luxurious, and they haven't forgotten about anything. Anything you can think of, they've paid close attention to detail on, and then their two golf courses are just, they're unreal.
I haven't stayed there.
Oh, dude.
Well, another one
gotta
you talk
try
about the private casitas and stuff. I don't know why I love the Wigwam.
Wigwam's good.
Wigwam's fun.
Wigwam's good. Wigwam's really good. I just like the golf course better at Boulders, and they're definitely a cut above. I'm not talking smack about Wigwam, but the Boulders, it is over the top. So if you're ever in the area, you got three good options.
Yes, and if you stay at a resort here and you golf and you want to take us golfing, we're
in.
available.
We'll fit. Yeah.
Go ahead and text word golf to 623-AZ Recon, and we are in. We may not be good at golf, but we are a good time.
We're a good time,
Yeah,
for sure.
For sure.